Good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Dharad, and joining me, my colleague Yatin Mota. It's another day and another tepid session for the Dalal Street. Yatin, it looks like every attempt of recovery is getting sold into, and it's happening day after day. Now, today also we did start in the green, given we had a good global handover to back up with, but quickly fell into the red too. Some recovery was seen during the day, but eventually Nifty did end the day flat in the red below that 22,150 mark. And even Sensex, that has slipped more than 100 points today. Now, what limited the losses in the market was the IT stocks, which saw a rebound after posting its worst February drop in 5 years. And we also saw the auto stocks also fared well after its February sales figures. Bank Nifty, however, which was outperforming the last 2 days, that succumbed today, and that did end with about nearly 0.5% cut. If you look at the broader end of the markets, small caps continue to remain hit while mid caps staged a smart recovery in today's trading session. Yeah, then now we were hoping for some green today, but once again, the bulls have remained on the sidelines. Ninth consecutive losing streak for Nifty. How do you decode this market texture?
So Lavisha, you have rightly mentioned that we opened with a
Hmm.
gap up, and then everything got sold into. So the FIDI figures obviously will be quite important today, given the
Hmm.
fact that on Friday we saw a huge 12,000 crore net sell from the FIIs, and if you adjust it for the MSCI buy flows, active FIIs must have sold in excess of 18-19,000 crores. Now the current market setup, what I gather from technical analysts and the fundamental people which you speak to, that 22,000 is a key support zone again. We have been talking about 22,800 being a support. The markets tried to defend that 22,800 mark for the 4-5 trading sessions, but eventually gave up. I don't think so 22,000 is that easy to breach. The markets clearly showed a sign that 22,000 is here to stay. Probably 21,800, 21,900 are again key support zones below which there could be some further sell off. But 22,000 to a lot of traders means important things. Today, in the last half an hour there was buying in general, but on an average we have closed below in the red. Which means that for the ninth trading session we are in the red. However, overall the market breadth saw some improvement in the second half post lunch. Whether or not we sustain this is a question mark. But the dollar carry trade, or the kind of outflows that we are looking at from emerging markets are slightly ebbing now, probably signaling that the selling will eventually exhaust in the month of March.
Well, hopefully, the selling could exhaust in the month of March. But let's see some of the top gainers in the Nifty. Well, Bharat Electronics seeing off about 4.5% gains. We have the interim dividend which will be announced a day after. Then we saw Aisha Motors with about nearly 3% gains. Good sales figures coming in from the company. Royal Enfield Dispatches showed a good resilient performance in the month of February. Grasim also did well with about 3% uptick. JSW Steel, BPCL, all of them seeing a gain of about 2%. On the other hand, if you look at the top losers on the Nifty 50, that includes the likes of Coal India, seeing a cut of about 2% at this point of time. We'll be decoding more about the stock later in the segment. Reliance Industries with about 2% cut. Reports are suggesting that one of its unit could face some penalties, so the stock could be reacting to that. Bajaj Auto, tepid sales figures with about 2%, modest 2% year-on-year rise in February sales. So the stock is reacting to that too. Bajaj Finserv seeing a cut of about nearly 2%, and HDFC Bank, one of the Bank Nifty index heavyweight, seeing a cut of about more than 1.5%. So yes, that was the top Nifty losers and gainers for you. What are you gathering from the broader end of the markets, Yatin?
Yeah. So, Ravisha, as you mentioned correctly, the auto sale numbers, few stock reactions there, be it Mahindra and Mahindra, Tata Motors, Ashok Leyland. In general, if you look at the top, 5-7 companies, they have reported good auto sales numbers, and the auto companies were reacting to those numbers. In the mid cap end of the market, Narayana Hrudayalaya, that continues to accelerate ahead. In fact, that stock is at 52-week high, 12% higher for that stock. Tube Investments of India, that is one Murugappa Group company, 7% higher. Aditya Birla Real Estate, and mind you, that stock was down 7-8% in the morning, recovered those losses and turned almost 7% higher. They have announced a 500 crore booking for their phase 3 in one of the projects in Bangalore. So that stock did well. What was not doing well is Angel One, and after the comments of Zerodha founders that volumes are not that great, we have seen a sharp decline in revenues. Brokerage stocks reacted negatively. Angel One being the accident of the day, 9% low for that stock. Kirloskar Brothers, SW Solar were the other losers in trade, apart from BSC, which turnover-wise saw a good turnover of nearly 2,800 crores in the cash markets. However, the stock was down nearly 6% in trade.
All right. Now let's break down some of the stocks that did grab limelight. Like I mentioned earlier about the auto stocks, they managed to hold the ground in today's otherwise weak, volatile session uh, after a mixed February sales data. Now, among the passenger vehicle segment, M&M definitely stole the show as it clocked about 15% year-on-year rise in total sales figures for the month of February. Moreover, the company's tractor sales also grew by 18% Y-on-Y, and UV sales rose by 19% year-on-year. The stock also reacted positively to this data, and followed by M&M, Maruti sales also grew marginally year on year, whereas Tata Motors and Hyundai saw a drop in their February sales figures. So similarly, if you look at Hyundai also, and of course Maruti Suzuki, the stock has been reacting negatively to their February sales data too. But if we talk about the two wheelers, definitely Eicher Motors and TVS Motors, that saw year on year rise in dispatches, whereas Hero MotoCorp's dispatches declined by 17%. So basically, two-wheelers decline was lower than that for the PVs and CVs during the month of February. Now, what the brokerages are saying, Motilal Oswal has identified M&M and Maruti as the top picks in the auto sector. And now, since M&M also continued to outperform Escorts in the tractor segment, the brokerage firm continues to remain bullish on the counter. Yet then PVs continue to remain a drag while there was some optimism in two-wheelers and tractors. Anything you want to add here?
So overall, I think if you look at Eicher Motors, 20% growth. If you look at numbers for M&M, their tractor numbers were up 15% year on year, and the automotive numbers also 15% higher. Maruti's number was flat on a year-on-year basis, along with Tata Motors. But overall, given the fact that there is so pessimism on the market, auto numbers have been slightly better than the expectation on an aggregate level. Especially Ashok Leyland, a 2% increasing CV sales versus a decline of 3-4%, which was the expectation. So overall, I would say that the month of February has been so far good for the auto companies, given the fact that the pessimism on the street was too much, especially to do with the fact that auto companies, especially four-wheelers, will see a slow lane for the month of Feb.
That's right. But let's move on to the next stock in focus. That is your Coal India. The shares fell in the trade and was one of the top Nifty laggards also after the company reported its business figures for the month of February. We can see that the production for the month for Coal India declined by 0.8% from last year, whereas it was only up by 1.5% on a year-on-year basis for the full year. So this production is more than half of the company's overall production target for what FY25 was. And now Coal India is left with an output target of about 142 metric ton in the month of March, which will be the last month of the current financial year too, in order to meet its guidance. If you look at the offtake numbers, that was also quite tepid. If we saw the offtake for the month of February declined by about 4.8%, so which was nearly 5% from last year. And for the year so far, the offtake grew by a modest 1.3% year on year. Now, what the brokerage